Has Kim answered that for you? I'm sure she probably has. Well, AMP's measuring basically momentum. It's showing you the momentum, the energy behind, if you like, the energy behind the move. And the reason why that's important is because it gives us what is basically effectively what we would classify as maybe a golden cross. Now, Reeve actually posted a chart that I took a quick screenshot of that shows some very interesting golden cross type trade examples. I don't know if I'm right in interpreting Reeve's chart, but would I be right, Reeve, in saying that your green line is your AMP line? Yeah. So Reeve posted the golden cross. Whether he knew he posted the golden cross or not, I'm pretty sure he does know. I'm pretty sure he does know that he's posting the golden cross in those types of trades, because obviously it comes back to the idea of the amount of pressure that is in a move, resulting in what we would classify as potentially a fat tail type event, right? So obviously, if we're looking at an event coming into the charts here, if we saw an event coming in here and we saw this very strong buy side pop here, right, a very, very big buy side pop coming in here, and we recognize with that very strong buy side pop that the energy is significant in this, then of course the AMP would be running beautifully in line with that. And so would the spectrometer. The spectrometer would be reading this, and the spectrometer would probably be sitting maybe somewhere about here, right? So the probability of a reversal is increasing, as you would imagine it would, because prices are going higher. But just because probability is increasing doesn't mean we start selling into a higher probability of a sell-off, right? There's got to be a reason for the high probability sell-off, otherwise it's called a fat tail event. So what we're now looking for is what we would classify as a golden crossover in terms of reading this narrative. The golden crossover in this case would be a situation that maybe does something like this. Okay, so what we then see is a change to this. Now, obviously, trying to draw it in exactly the way it would show up on your charts is going to be a little bit more difficult, but we could maybe see something perhaps like this, and then perhaps like this kind of idea here. And obviously, if we just track that with price, you'd imagine that this is relatively standard to see, because obviously what we're then seeing is we're seeing a what is called a buy trade here coming in, for example. This would be a definite example of a buy trade coming in. But obviously what happened on the retest is if we look at the trade the way that the retest is developing, judging by how we're seeing this is your golden crossover opportunity to go short. As a spectrometer seller, this is your opportunity to look at this and say, there's a very good excuse now for me to start looking into this golden cross opportunity, because whilst the probability is improving significantly, the energy in the buy side is not with it. And there's a very good chance that we're going to see a reversal trade coming into that golden crossover. So these golden crossovers are very, very valuable. Without it, it's very difficult to be a trader on probabilities, isn't it? Because we're looking at a fat tail event. Would you agree with that? Would everybody agree with that? If the probability and the energy are the same thing, there is no trade. There's just no trade. There's going to be a very, very tough gig if you're trying to fade into those types of takeaways, right? So when we look at Reeve's chart from earlier, and I took this screenshot because I wanted to actually touch on the golden cross trade because it had a couple of good examples with an actual trade listed. So Reeve's going to probably charge me for the commissions again, as usual, for the copyright on this. But you get the basic idea. So Reeve's trade is the green. Reeve's AMP trade is the green, right? So you'll see that there's a golden crossover trade there, isn't there? You see it? There is absolutely a golden crossover trade there. And obviously you're going to be looking at that series and you'll be looking at those A10s and saying, these are really good opportunities to go short. Now, you might look at it and say it didn't really go very far, but you still made yourself, what, 0.20s to a low print there of 940s. I mean, ultimately, it was nearly $2,000 a contract. So, I mean, you could argue whether you made some money on it or not, but it's still pretty good money, right? Still pretty good money. Is there a golden crossover here? just to make sure you're all seeing it. No, there isn't. Is there a golden cross over here? Is there a golden cross over here? Yeah, because you can see that this is turning up and this is still continuing down into that A10 there. So there's a golden cross opportunity to maybe play into that as a buyer. I'm not saying you will play it, but at least you're now recognizing that the conditions are correct for you to take a look at this. Is there a possible golden crossover opportunity here? There is, because obviously you can see that the probability has gone significantly higher, whereas the energy is starting to drain away from this. It's maybe not as good because the green is still rising at that stage, or at least it started to rise again at that stage, and therefore it's, I mean, you might hum and haw about it, and I would certainly hum and haw about it as well, because remember, the probability needs to be high enough, which it is. It would certainly be something you would consider as a possibility at higher prices, but I certainly wouldn't be chasing it anytime soon, right? It's certainly a possibility, but I wouldn't be chasing it anytime soon. Is this the best golden crossover here? Yep, it is absolutely the best golden crossover. But again, got to be careful with the flush. It's always going to, be something that you've just got to recognize that these higher distributions are definitely opening at higher prices. So you've got to be aware of the fact that this is definitely a bullish sweep to the upside. And obviously, Reeve traded this absolutely spot on. He waited until the compression took place, and then he took his shot. He didn't try and call the top edge. He didn't try and call when the end of the move was there. He just waited to see it, which was here, and then said, you know what, let's wait until we see that seller coming in. And when do you see a seller coming in on a Heikin-Ashi candle, guys? You might see when it turns red. That's not actually the answer. When do you see a possible trade when a Heikin-Ashi candle comes in? Not just the wick, because it's got to be a wick at the other side, hasn't it? Because there's always got to be a wick on a Heikin-Ashi candle, you'd imagine. So, for example, if this price is going higher in oopsies, that's not a candle. If this price is going higher and the Heikin-Ashi candle looks like that, are we going to sell it? No. If it goes higher and the Heikin-Ashi candle looks like this, are we going to sell it? No. If the price goes higher and the Heikin-Ashi candle does this, are we going to sell it? Well, at least we've now seen an opportunity to start working into the momentum shift into that trade. And you'll see that on the very candle that Reeve started to sell into this trade here, you'll see the Heikin-Ashi printed a negative candle on that, a negative pin on the bottom of that candle, allowing you to start now seeing that the momentum has changed shape and allowing you to take your shot at a more active, more confirmed, don't like that word, but more confirmed selling opportunity. And it resulted in a very reasonable profit for a little sell side for 3 contracts, $7,000. You'll take that any day of the week. But there's your golden cross opportunity. You can see actually at the bottom edge here, we started to see the early stages of a golden cross again coming in, didn't you? So you've got the early stages of a golden cross. Now, obviously, in terms of probability, the AMP is very low in the water here. So you obviously always would prefer, for example, the black line to be above the green line because they are scaled properly. They're scaled so that shows. And the fact that that's not quite above it, the fact that's not quite below it kind of asks a question, is there still too much energy in this? And therefore, I've got to be careful with my answer to that question. And, obviously, when we get it clean above, and then you see the selling coming in, there's no question. You just get your short in, see if you can make some money out of what should be a high probability event with no energy working against you. Because energy on this move here is a tailwind for buyers and a headwind for sellers, isn't it? Energy. Tailwind for buyers, headwind for sellers. So if you can get into that tailwind, you want to trade the tailwind. You want to go with the tailwind. So it's just simply that. It's the energy of the drive itself, like a momentum type drive. How much energy is in this? And if the energy is starting to disappear into the atmosphere, you're getting ready for the turn in the narrative at that point and make some easy money trading decisions. So I don't know if that answers your question, Mark. If it doesn't, well, maybe somebody else can have a try, because I don't know what else to say.